Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 28th of March 2018. This is Jens Klatt speaking, exclusively presenting this for me to you here for JFD Brokers. We want to have a look at the markets and how things are going. Yesterday, US equities came under serious pressure once again. Main driver here, again, the technology sector, especially driven by the FANG shares. What's FANG? FANG is Facebook, Amazon, Apple, Netflix, and Google. And especially Facebook was still under pressure. Seeing some serious selling pressure here based on this scandal around data, which was used to get better insights of the behavior patterns of users from Facebook here, for example, and was used to was used to send commercials, but also ads and all this to influence to some extent probably also the election around Donald Trump, for example. The thing about this is it's not nothing new. It's something which could have been expected and probably was expected. Even more interesting to see right now that the media is jumping on this train here and really making this a huge topic. And so the first thing you start to think about is, why is that? Again, working with collected data here is probably the main business Facebook is generating. This company is a multi-billion-dollar company, and you can't really expect it to make money based on the fact that, or only on money, making money out of the fact that people register here and share their pictures from Instagram or whatever. But it's like, there must be a huge business case in the background, which is the main revenue generator, let's call it. And so selling data here, especially also all the things now making the rounds here, the election of Donald Trump and how this could have influenced voters here, for example, is something which is nothing really new to no one really. And now the question is, what's going on here? Why is this such a huge topic now? Why is everyone going crazy about this? So especially when reading it here then through the German media, you come to the conclusion that we are about to see some restrictions here, probably some laws which could being brought up here and tell Facebook, for example, not being allowed to sell data anymore, but to keep the data within the company. And this is something really interesting, because this would increase, in fact, the power of Facebook or as a company, or similar to Google. It's the same thing. So if they're not allowed to sell this data anymore, they still collect the data and they still have the data, and their influence here and their power grows even bigger, I think. And that said, I think this huge drop here we can see right now in Facebook shares, it's probably we are not yet done. Let's put it that way. So I could imagine that this probably accelerates still a little on the downside, especially if some risk aversion hits the market, but it's not mainly driven through the news around Facebook anymore. But nevertheless, rather sooner or later, probably the market will then see will probably bottoming out and taking off from there. And I think Facebook has still some huge potential on the upside if this really comes into play, that they are not allowed to give the data away anymore, because then there is still interested people, small companies, for example, that just go over to Facebook and say, hey, by the way, I'm selling this and that product. Please make sure that my ads are placed among the Facebook pages of the users, which could be an interested which could be interested in my product here. And this is also, especially because of the monopolistic structure which this creates here, this is something which is then definitely positive for, in this case, Facebook shares, but also the same is for Google, true for Google, even though Google hasn't lost that much here compared to Facebook, who dropped by something like over 20% since the beginning of February. If you look at, in this case, Google, respectively Alphabet, here, 1 second, let me just see here. What you can see is, yes, we also dropped here, but compared to what happened in Google, I'm sorry, what happened in Facebook, it's not that dramatic. And in fact, I consider this structure of higher highs and higher lows still be in play until till we trade above here, this level around 900 USD per share. So this is Google then. Nevertheless, I think that the all in all outlook based on these thoughts, if they are correct, is something which is strongly bullish for Facebook, but also for Google shares, to be honest. So now let's switch back to the DAX then, respectively, US equities first probably. So again, yesterday the pressure after the market pushed initially higher and sold off sharply then, and lost another from the daily high, something like, yeah, the trading range of the day was something like 700 points, and we lost most of the gains of the day before. So the day before, on Monday, we made 669 points, which was the third biggest gain ever in the history of in absolute terms here in the Dow Jones. Yeah, we lost most of these gains again. In fact, here when looking at the S&P, for example, what you can also see is that the S&P really collapsed then in the last hours of trading, or last minutes of trading, I'm sorry, and nearly gave back all these gains and even more than that, and then the day before. And so that was mainly, again, technology driven here, and something which also pushed the DAX aggressively lower, even though now it seems, especially with this Easter weekend ahead of us, that the pressure on the downside seems to diminish a little. Look at this. I mean, we pushed aggressively lower yesterday, stabilized a little in the morning, nevertheless didn't make it above the exponential moving average 50 here on a 5-minute time frame, and then pushed lower first after triggering short here the first time, triggered short again, made new lows, but not really significantly, and now are trading back towards the 50 exponential moving average. And this is a first sign. I mentioned it already in the German version of the morning meeting. I said if I was short, I would really look very skeptical at this current price action, because it's showing that the market is obviously losing some momentum on the downside. It seems to be over, let's say, on the downside. Sounds, I mean, we still have the chance to probably see some further pressure. Nevertheless, it doesn't look that promising for the bears anymore from an intraday perspective. And I said, once we make it back above 11,850 points, I think the picture could lighten up. And not only that, but probably this is then the start, especially if US equities can stabilize a little and FANG shares can stabilize a little, that this could lead, with dropping volatility into the prolongated Easter weekend, could result in the DAX then probably make it towards probably above 12,000 points. So it could be that we are about to see a small, let's call it Easter rally, forming here. Even though this is, in fact, it's still too early to call such a scenario, since everything below exponential moving average 50 here on a 5-minute time frame, it's for me from a technical perspective, even though it's a rough picture I'm drawing here, but nevertheless I consider it to be short till we make it back above that level. Nevertheless, that it's getting closer, and if we make it above 850. It's definitely possible that we're not just making it above the 50 exponential moving average here, but also make it back towards 11,900. And if we make it above that level, well, further room is given up to 950, and then, well, 12,000 is not that far away anymore. And again, if US equities can stabilize today and don't see such huge selling pressure forming as yesterday, well, I think there's a realistic chance that that we'll probably get to see Easter weekend then at least in the DAX here, which is not trading on Friday, on Good Friday, and also not on next Monday, but restarts on Tuesday then again. I think we have a good chance then that we probably see Easter above the mark of 12,000 points. All in all, I'd like to say that currently I definitely step back from short engagements and short scenarios. Here, I don't like to draw them, but I don't like to draw a long scenario too, because therefore, again, we need to make it back above this blue line here, this exponential moving average. If so, yes, great. Short stint above that level, retest of this region around 840, 850, target, make it above 900 and higher than that, and probably aiming for 12,000 with a stop below 11,770 points here on the downside. From risk reward perspective, it's getting interesting only if we make it towards 12,000 points, because everything below that means nothing more than 70 points risk, and it's only generating a chance if we make it up, let's say to 910, for example, of 1-to-1, which is under current market conditions, I think it's not enough to justify a trade, and I don't think that this has long-term positive expected value if you trade this scenario. Let's now move on to the FX markets. Very interesting picture we are seeing here in the Euro USD. Really interesting? No, not really. But yesterday, at least, the stint towards new March highs here. As you can see here, I said that probably if you faded this break above the March highs and are betting on the market now dropping, at least on an intraday, from an intraday perspective, I said that probably it would be a good idea to become more aggressive with your stop on a lower time frame around 2380, 2390 here, because it seems as if, I mean, the overall picture still is very choppy, but it also seems as if there probably some buyers could come in, and we don't get to see huge drop below that level again. And in fact, that was what happened yesterday. And yeah, today, well, we're trading around 24, now slightly below that. Let's see whether we make it below the lows from yesterday or not. I want to be honest, I don't want to be positioned in Euro USD right now, not on the long, but also not on the short side. I don't consider this to be a very attractive currency pair. The same is, by the way, true, even though action is far bigger here and more interesting, what we get to see in pound sterling. So yesterday, for example, we pushed as low as 40.50, 40.70 and attacked the current trend support. I said everything above that level, 40.50, 47, I consider to be long. Nevertheless, what you can see here is the market being really choppy and not, being capable of pushing above 42.30 here, 42.40, and then aiming for the intraday, the yearly highs, which can currently be found around 43.50. Question is, what's happening here? It seems to have something to do with capital in, respectively, capital outflows into the quarter, at the end of the quarter, first quarter of 2018 here. So very difficult to tell what's the motivation behind those moves. All what we can say is that we currently should see the picture in pound sterling against the US dollar neutral, but with a bullish tendency here. So there's still some room on the upside, and I could imagine if we make it above the highs from yesterday around 42, 40, 43, 42, 30, 42, 40, that then we have another room for 100 pips on the upside, which could bring us up towards 43.50. Gold is getting really interesting right now. Also something worth mentioning, because after failing here to attack significantly the region around the current yearly highs, 1,360 to 365, gold is now coming back and triggering, or at least trading back towards the region. I made a topic already yesterday where I said I consider this region to be attractive for potential long engagement. So first positive reaction was seen yesterday. Today we made slightly lower lows and currently have trouble to find enough demand to see a push back above this interesting level around 347. I think if we make it back above 347 here, then the next attack on the yearly highs around 360, 365 is in play. Nevertheless, there's still a chance that we probably dig a little deeper, probably down towards 335 here. And what I presented to the German audience here was, as I said, probably it makes sense to scale into a trade here. So let's say we're planning to trade 4 contracts here in gold. That means that you probably take the first half right now, buy it here, and then buy the second half once we go back above 347 and play. And since we are trading a longer term time frame, the thing what we are aiming for here is in fact to optimize our entry in such a trade. We plan to work with a stop here below the current yearly lows around 302. So 1,302 USD per ounce is the stop level. And so probably the current region 335. This is the region where you plan to buy the first half of your trade with a stop below that level, and then put on the second half if we make it back above 347 from 347, and that's it in fact. So that's it from my end. If you have any questions, please let me know your questions. Shoot me an email. I definitely look forward to it. I wish you all the best. Happy trading. Watch your stops, and talk to you again then on Thursday, tomorrow. Yes, 9:30 a.m. GMT. I definitely look forward to it. Wish you all the best. Take care. See you, and bye-bye.